So as you do the introduction for yourself, please think about that question as an answer. But as the start for the advancing of cross-border payments in the South African development community, will normally as SADC, I think it is an open and compatible cross-border digital payment system is becoming a more of a necessity for the SADC area as the SADC area expands and communities get together. And the previous panel discussions talked about costs, talked about integration to some level, and but I think cross-border payments touches on all of those, and we need to improve the systems that we currently have for the development of financial inclusion within SADC countries by streamlining the flows and ensuring that the advantages of migration and remittance are maximized. The importance of cross-border payments, remittance cannot be overstated, given that these payments provide countries with important resources for foreign exchange in some instances, but I don't think South Africa needs that, but I think we all need it. But households with critical sources of income. So with that in mind, I would like us to then start discussing the advantages and some of the discussion points that we've discussed earlier, earlier in the week, of cross-border payments. So I will start with, just as a start, I will then move on to our discussion points. To Maxine and Julian. I'm starting with you, Maxine. So what are the main contributing factors of a high cost of cross-border payments or / remittance in the region, SADC region? I know that you've been quite a few places, so let's stick to SADC.
Thank you, Tshepo. My name is Maxine Hlaba, and I'm with the SADC Banking Association. Character probably would have to be Fred from the Flintstones. Tells you how old I am. But yeah, he always seems to be confused. He's always calling for Vilma, and he's always in all sorts of trouble. Always fascinates me. Tshepo, challenges in this world, I think, are many. And I think probably some of the biggest are that the regulatory environment, and we've heard a bit of discussion from the couple of panels before us. So the regulatory environment is challenging. You would understand that the SADC country, which is 16 countries, doesn't have an overarching regulatory framework. And you would know that in the work that we are conducting in this area, we are probably lucky enough because we do have a grouping we can go to, and that's under the SADC central bank governance structures. But our different regulations are not aligned in the various countries. I'll stop there, I think, for now.
Julian?
It's Julian Warnasuriya from FNB, FX Strategy. So predominantly look at solutions for cross-border payments across all business segments. My favorite cartoon character, probably going to give away my age, but it's the Roadrunner. I mean, it used to be a morning cartoon just before you had to rush in to get to school. And you either were rushing your breakfast and spilling your breakfast all on yourself, and then this guy would be speeding around on the TV. And somehow he always seemed to survive, irrespective of where he was getting smashed from, thrashed from, but he just survived. So that comes to mind. In terms of cost of remittances, Maxine's touched on compliance and regulation, definitely. But probably something that we kind of miss is that traditionally, authorized dealers, where payments have been for generations, have been done through your traditional SWIFT platforms. Banks and authorized dealers have, for many years, effectively standardized that pricing. And when I say standardized, if you can go onto any of the bank's websites, you'll see that the SWIFT pricing is closely aligned for all the banks. But also to note that your mobile transfer operators, your likes of your MoneyGram and your Western Union. The reason why I'm touching on it is because I was part of the team that brought MoneyGram to South Africa about 20 years ago. That pricing is dollarized. So when they bring that pricing in, they bring it in at $5 per transaction, which was the minimum cost of a remittance at that point in time. And if you consider at that time, the exchange rate was 5 Rand to the dollar. Fast forward 20 years, and we've had cases where the Rand dollar has touched 20 Rand already. So the precedent has been set for what the cost of remittances are. So how do you unwind it? And I think that unwinding is starting to happen with the emergence of more non-traditional payment providers.
Thanks for that. Maxine and Julian, but I think you touched on compliance a bit on the cost. But is it the real only cost that banks are charging, or I'm sorry, banks? Sorry, I'm from BankservAfrica, so I'm owned by banks, so I see one of the shareholders is looking at me with an eye there. But is it only compliance, the cost of compliance, that we're seeing these high prices for cross-border transactions? Or there is another factor, or there's profiteering in the mix? And I'm putting you in the spot. Maxine, I know you've been with the Bankers Association. They are your supplier. They are your funders.
So I suppose it will depend, right? Firstly, if you're looking at the remittance world, and if we look at the fintech world, and they predominantly do a lot of that business compared to what the banks would do. Our banks would probably do more corporate banking than really getting themselves into that space. That's a lot in the loop. They're not off loop, right? And probably that then speaks to the work that we have done at BankservAfrica in trying to create an interoperable platform, which then takes some of the nuances that they're currently faced with today away. So you provide a platform which will try and solve some of these issues. And these are issues in our work that they've shared with us, right? So is pricing the only problem? No. Is it the only challenge? No. Is regulation the only challenge? Probably not. But, you know, exactly to what Julian has said, there are all these other unintended consequences that you're probably now trying to unravel. And maybe the question becomes, how can you? You would know that in some of the work that we're doing, some of the business relationships we've had to go into just to try and understand have just shown us some amazing stuff that we will not repeat here. But then you wonder, like, how do they get away with this, right? And you begin to question. So it's one of those things, Tshepo. I mean, you know, when we started our work, we were told that the SADC region, and probably in particular South Africa out, the cost associated with remittances is quite high. Today we're still flagged red, and thus you have the regulators and everybody else in the same room trying to see how do we bring these costs down. I don't know that we will have one solid solution for that, but I think the idea is to keep on trying. So with the platform that we have in place, the TCIB, that's one solution, right? And we're not also saying that everybody might join the platform, though we can list the advantages. The business relationships that are there, how do you unwind a 20-year business relationship? I think a bit difficult. But we keep on trying. We have a platform that has a solution, and rather try than not know is my belief. Yeah?
Thanks for that. But maybe, Julian, from your side, I think the G20, call it, things that they want to achieve around costs, do you think that the current environment within SADC is conducive to bring those costs down for the market?
I think by default, we're going to see a transition where typically the behavior will change purely because innovation is changing. So if we look at typically how things have evolved within SADC, for many years you had infrastructure like SADC RTGS that served the market very well, very trusted platform. Likewise, if you compare outside of SADC RTGS, you had the SWIFT channel that's effectively done your global payments very efficiently. But then you've also seen the emergence of mobile network operators and wallets. And I think the last stat I saw was that there are 3 countries now that have more wallets than bank accounts. So by default, you're going to find that the cost of transactions will align and definitely be lower than traditional pricing. That said, you also have a cash component that some of my colleagues alluded to earlier. And despite all the efforts to remove cash from the operations perspective, it's still a massive cost for the bank. So we've transformed digital channels, we've made it seamless, we've made it single-stage transactions. However, there's 2 components that we need to think about here where the complexity comes in. You've got your bank customer, so that's a customer that formally has a bank account with the banking institution, which makes the ease of a debit to that account easy. And then you've got your non-bank customer. That's equally important in the remittance space or payment space. And that's where the cost is. Because the cost to maintain that profile and to maintain a non-bank customer is where the cost is. Because that maintenance is not a once-off maintenance. Permits need to be updated on an annual basis. Approvals in terms of your permit validations and what they're valid for have certain permutations as well. So it's complex, but I have a view that the cost of remittances will decrease because of the increased competition.
Yeah, okay. Now I'm convinced that it will go down. But then coming back to you, Maxine, banks and non-banks, fintechs, MNOs, the whole shit. You've talked about TCIB, which is for banks and non-bank system. But what are still the barriers that you believe that they're still facing? And how can we sort of try and alleviate those? Because they'll have an impact on the take-up of the services that we can do for cross-border.
So maybe let me talk more about the fintechs, because you find that the banks are regulated and seem to be a bit more structured, right? In our work, when we began our work, first problem was where are the fintechs sitting? They have no association. You can't go to them, one-stop shop and start having a discussion with them. They're all over, they're fragmented. I'm happy to see that in South Africa now there is an association for fintechs. And what we're beginning to see across the region is the same is happening. You're beginning to find an association. So at least that's, like you can go to that door. Fintechs, in the work that we've done, we've realized as well that in a country like South Africa, which gives a limited license to a fintech, it's per product. And then they've got all sorts of categories for all sorts of things. And when you're saying to the regulator, here's a platform like the TCIB you've approved. This fintech now wants to do this business on this platform, which you'll have oversight over. We then find that because fintech 1 was licensed for product 1, the idea is no. So they must come, you mean they must come back to us for another license. And when you talk about another license for the next product, it's 6 to 12 months before an approval will happen. And you're saying, we don't have 6 to 12 months. This is a product, it's no different from product 1. You want to call it product 2, that's fine. It's no different from product 1. The only difference is we're putting it on a multilateral platform versus your product 1, which was sitting in a bilateral arrangement, right? So you're taking them out of a bilateral arrangement into a multilateral. We have fast learned that the concept almost of multilateral does not exist within the regulatory field, and regulation is not designed for that. It has taken many workshops in a couple of years to now get to the point of that understanding almost, and I say almost because I will also tell you the story of day one when we went to the regulators and said, this is the work we want to do based on what you asked us to do. Needless to say, that meeting lasted all of 2 minutes and we were kicked out. Literally. And kicked out because of the understanding around things like store of value, right? So they said to us, no, you're going to, this is store of value. And we're like, no, the person on the street will be transacting using whatever it is that's available to them provided by the fintech or bank and give out there. So the challenges, I think, will be there to an extent, and maybe not for too long, Tshepo, because we're beginning to see the work now that is taking place at either the G20 level or within the BIS structures. And a lot of our regulators are sitting in that space and they're participating in that space. So I'm hoping that what is happening at that level will come through to our respective countries, and also just mindful that we can't adopt everything, right? Because we sit in different environments, but that some of the nuances that we're struggling with today or that we're faced with today, there can be that vision of how it can be achieved.
Julian?
I guess my observation when it comes to banks and non-banks is probably that over the years, we've almost created an invisible barrier between the two. And that's probably transcended because of, I'll call it maybe the rules of engagement. If you look at non-banks, typically lower entry barriers and their governance structures around how they operate, very different from an authorized dealer. So you find what's happening over a period of time is that when non-banks are now knocking on the doors of authorized dealers, as an example, for sponsoring agreements, from a settlement infrastructure perspective, where they need support from that side. It's almost that authorized dealers almost feel that by offering that service to them, you're almost enabling a competitor, especially if Forex is your mainstream core product. So, I mean, for me, the regulators, if we want this level playing field, then I guess the rules of engagement must be equal so that we can get non-banks and banks working together to ultimately solve the wider financial inclusion problem. But that must be addressed.
Sorry, it doesn't work. Then, if regulation is at the core, Maxine, how is regulation enabling this type of innovation that you've seen? And maybe to Julian, what would you like to see regulation change, particularly in SA? But Maxine, I would like you to give me a little bit more from a SADC perspective to say that how is this regulation that, or maybe which regulation should change? I have a few, but, but I'd like to get your views.
So, Tshepo, once you start talking regulation, means it must eventually at one day arrive in Parliament. That takes too long. But what I have found is that if you engage enough times with the regulators, sometimes there are nuances in the same regulation that allows for them to have an open discussion without us waiting for the day to get to Parliament, because that's a long time. However, it does take many meetings and it can be painful. There are risks that they will obviously see, and you know, notably so you're using people's money. You have to be careful around that. However, I think in the region what we've noticed is that you have to start a discussion somewhere. And I'll give you an example. In our work, just to touch on what Julian said, when the fintech comes to the bank, who, by the way, is holding his corporate account, so that one has always been a no-brainer for me. He's sitting with his corporate account, he can do the Forex deals on behalf of the fintech, but no, we'll say no to the fintech, so that's another story for another day. So in our work, when we realized that the banks were not going to talk to the fintechs, we had a challenge around settlement, and it's a real challenge. So our work, you know, is always work in progress. So we started off with, okay, the banks will pair up with whoever is anyway today their corporate client, and they'll do the settlement on their behalf. Well, guess what? We then realized that won't happen. But the corporate account is still sitting. But that discussion of we will do settlement for you won't happen. So fine, park that idea. We then go back and say, okay, maybe what we should do is see if the SADC RTGS cannot open up and allow fintechs directly to sit there. 2 countries in the region already do that today. Why not do that? We got approval, go ahead. Then we realized that domestically today, right now, a lot of the regulation in the domestic area does not allow for that. So guess what? We're back at the drawing board.
Yeah, so I totally agree, Maxine. I mean, those challenges are real. But I think if we look at the landscape, slowly but surely there are items that are evolving that are almost forcing more collaboration. If I look at just typically the ISO standards that have come, where the messaging language is going to become universal, so we all talk from the same book, we understand the payment mechanism and the capabilities very much more clearly than before. And then if we look at the work that's been done within the SADC region, purely just if we look at balance of payment reporting and the harmonization of reporting, the regulators are starting to make grounds and in-grounds to address those anomalies. And once you've got that, let me call it regulation inclusion. So this is important. We talk about financial inclusion, which is bringing banked and non-bank customers to offer them financial services. But we almost need a prerequisite, and that prerequisite is regulator inclusion. So when all the regulators are effectively also following a similar universal standard of operating, then effectively we will address financial inclusion.
Thanks for that. I think I still have a few questions. Is there any questions on the floor that you would like? How are we doing for time? We're still good? Okay, looks like we're good. Okay. Yeah. Any questions? Okay, I'll go on to the next question. And I think, thanks for that, because of regulation, it's one of the stumbling blocks, I think, for most entities. We've seen it in our world where it takes over 18 months for a participant just to go over the regulatory hurdles. So, yeah, that regulatory inclusion is something that I think I'll steal that. Maybe have more discussions around regulatory inclusions. But then, what will be vital then for the success of cross-border payments within SADC? And I'll be specific now. For SADC RTGS to coexist with TCIP, but I think we need to have some pointers for one of the systems, the interoperable systems that we have within SADC. What will be then vital for the success of these payment streams?
Tshepo, if I had my way, I would say everything be compulsory, but I know my neck would be on the block. Look, you've got a very successful SADC RTGS. It's since inception to date, we've cleared about 14 trillion rand. You've got 88 banks there. So I think that's a good story. Platforms, in my view, take a while to mature. So a lot of work I know has, in the RTGS world, there was a lot of work we had to get into, and we are finding ourselves back at that same space again, that in the TCIB world, there's a lot of work we're going to have to do. The success for me would be to see, firstly, to not see in December the many trucks and buses on the N1 going north, whom I know if we had to stop each one of them are carrying no less than 50,000 kwacha rand. Chances are on any given truck and bus, they've got anything between 100,000 rand to 200,000 rand. And those of us who follow the journey of the buses going up north know that they are getting hijacked. They're stopped at every, and that one fascinates me, because sometimes I just slowly just drive and watch this. They're stopped at cop number 1, there's a discussion there, and then 10 meters down the road, cop number 2. So I'm always wondering, by the time they get to the border, what happens? You know, how much do they have? Success for me would be knowing that that grandmother in the respective country who has been sent money by her child to enable facilities on the ground gets that money. Because a lot of the cash that we're talking about is really being sent by faith. So much faith that today the other business that is there, whilst it might not have cargo on its roof, actually has, what we talk about a transport business, guess what? Some of the taxis are just doing a cash business. They've got cash on them, or the car has got cash in it. The driver crosses the borders very quickly just to go and do the delivery. Hopefully, he still has the address list of everybody on it. So my dream and success for the two platforms would be, whilst we want to try and mop up cash, and I know we will never really succeed because, in the worlds that we deal in, cash is king. But we probably need to find ways to take out the cash just from a safety point. And for me, it's about, can this cash or whatever form of value we're sending somewhere, can it arrive at where it's needed? Because once we delve into those lifestyles, the $100 which might be insignificant to somebody is so significant to the next person because it's enabling a livelihood where it's going to. So for me, that would be the success.
Very insightful, Maxine, and something that's close to my heart, so appreciate you echoing your sentiments. I think for me, and maybe the way we need to address this is, a SADC payment rail is effectively no different from the traditional SWIFT rail. So if we look at whether we talk first mile or last mile, the responsibilities between sending institution and receiving institutions from a regulatory compliance perspective all resides at first mile and last mile. It doesn't reside in the payment rail. That interoperability as well resides between the sending and receiving agents. We determine the termination and origination channels for our payments, whether it's app, online, whatever mechanism we choose where payments originate and terminate from. So for me, the message for success is don't ring fence or restrict the capability for a SADC payment rail, because effectively the controls on this payment rail is not on the rail itself. It actually resides with the authorized participants that are mandated to use the rail. So when you consider what one of my colleagues alluded to earlier, where they mentioned activity-based regulation, that's quite critical, because you shouldn't restrict the value of payments or the type of payments that are executed on a payment rail. Because if it's managed through regulation per activity, then any type of payment can be processed on a payment rail.
Thanks for that. Then are we saying that within SADC we're doing something right?
Tshepo, I would want to believe that we don't blow our horn loud enough. Today, right now, SADC implemented ISO 20022. We were the first on the continent, second in the world, yeah, as a regional bloc. So we don't blow our trumpet enough. Last year we celebrated 10 years of the SADC RTGS. Today you are able to do your banking business effectively, efficiently in intra-SADC, right? If your bank stops your payment, if you're a trader here, it's because you've not given your bank the correct information. You've not given them the balance of payments code. You've not given them the necessary documentation. But we say that the payment is straight through processing. It's a minute. It shouldn't take long. If your bank has delayed your payment, it's really because you have not done the due diligence with your bank, either on the sending side or the receiving side, and therefore they will hold your payment. We can go on with our successes, honestly. I think we just don't talk about it. I believe we are doing something right. It is slow, yes, it is slow. And maybe it's slow because we don't have the single currency we once upon a time talked about. So today, as you know, we do our transactions in Rand. I'm hoping the next time I come here, maybe not, it's the second year coming, that we'll be able to talk about other currencies, because now we're saying, let's add on other currencies onto the SADC RTGS. And so in terms of your work, that should trickle down as well and should make your work a bit easier as well. Yeah.
Julian?
I think probably the closing statement that Kumaran from BASA made, that Africa will be providing solutions to the world. I actually strongly support that, and I think we definitely are capable of doing that.
Well, thanks for that. I think if you talk about the Africa one, I'm reminded of one of our presidents who said, solutions for African problems, right? Or the other way around, right? But I think it was Thabo Mbeki who said we must... Kagame, yeah, okay. So, yeah, in conclusion, thanks Julian and Maxine. I really hope that next time we meet here, we will be talking of progress in the regional integration projects, particularly the low-value payments, which is transaction cleared on an immediate basis. Thank you. Thanks, Maxine, and thanks, Julian.